several months to get through a audit. This kicked off early last year with the execution of the engagement letter. Then we're on site for 2 weeks during what we call interim field work. So we come out and we're performing procedures during the year that's under audit. And so we were on site for 2 weeks during the summer in the month of June. That phase of field work, we're focusing on processes, internal controls, testing compliance with federal and state requirements, especially those requirements that apply to the district's federal programs. Once the fiscal year is over and management has an opportunity to post all closing entries to the general ledger, we return and we're on site again for another 2 weeks. At that point in time, we're focusing on the financials. We're testing the financial statements. We're making sure that the transactions recorded in the general ledger meet our expectations based on budgets and amendments made by the board, based on decisions made by the board during the year. We want to make sure that the financial statements, everything that's in this document here, tells the full and accurate story of Alief ISD for this period of time. So we do that by confirming information with third parties directly. We do that by confirming information, corroborating information with source documentation that we request from management and performing various analytical procedures. So in total, we're on site for a month out of the year, 2 weeks during interim field work, 2 weeks during year-end field work, and then there's a lot of work that happens remotely from our offices as well. So all this is in an effort to obtain enough audit evidence to issue an opinion on the financial statements. So there, as external auditors, there's 3 different types of audit opinions we can give on a set of financial statements. A disclaimer would be an example, either the records didn't exist or the records were in such poor shape that we weren't able to issue any type of assurance at all in whatsoever. So that would be a huge red flag. A modified opinion would be that everything's okay except for the items that we list in our report. And then a clean opinion, and this is the opinion we've issued for Alief for fiscal year 2019, is referred to or called an unmodified opinion. So our unmodified opinion, what you would refer to as the audit report, is only 3 pages of this document. So everything else that's in this comprehensive annual financial report comes from the district. So I think that's noteworthy because not every school district, not every government can prepare this document in-house. So I think that's something that needs to be pointed out because that speaks to the experience and the competence on staff here at the district that they're able to prepare this document in-house. So the only thing in this document that comes from us is our 3-page audit report that contains our unmodified opinion. So that opinion is the highest level of assurance that we can give on a set of financial statements. Once this document is made public and issued, the users of the financial statements, in addition to the board, in addition to management, the public, but the financial advisors, the credit rating agencies, they're waiting for this report to be issued. They're going to make sure first that our opinion is unmodified, and then they'll perform their analysis knowing that the information is materially correct and complete in this report. The next 2 reports that I'm going to refer to are contained in this separately issued single audit report. This is the thinner document. So because we do perform the audit in accordance with government auditing standards, we do have to report on the district's internal controls over financial reporting. And so I'm happy to report that in this report, as a result of our audit procedures, we didn't identify any deficiencies or any material weaknesses that we had to report there. No non-compliance that's material to the financial statement. So that's a clean report there. I mentioned earlier the term single audit or federal single audit. So because the district does receive federal awards from federal agencies, in addition to the audit of the financial statements, it also has to go through a compliance audit of those federal programs. So in fiscal year 2019, there were 3 major programs. So we tested Title I, the special education cluster, and then Title IV, Part A. Overall, during fiscal year 2019, the district expended almost $65 million in federal awards. So our 3rd and final report is on the district's compliance with these major programs. So no internal control deficiencies or material weaknesses, no question cost, and no non-compliance that we noted. So it's pretty common for a governmental entity to receive an unmodified opinion. What's not common is for the governmental entity to have such clean results. Not a deficiency, not a material weakness of some sort. So I think that's noteworthy as well, to point out that not only is it unmodified opinion on the financial statements and on compliance, but also there's no deficiencies, no significant material weaknesses or significant deficiencies. 3 clean reports, so it's very good. Looking at just some financial statement highlights, this condensed statement of net position is the district's balance sheet on a full accrual basis of accounting. So this is very similar to the basis of accounting you would see in the private sector. So this reports all of the district's assets, including its capital assets. So total assets on August 31st, 2019 were $778.4 million. The majority of that balance is going to be in the district's capital assets: land, building, vehicles, equipment, net of depreciation. Current and other assets of $248.8 million. That's cash, investments, and receivables of the district. You have total liabilities of $750.8 million. A large part of that balance is going to be your non-current liabilities, or your outstanding bonds and unamortized premiums. This is year number 2 of reporting this net OPEB liability. So kind of in the middle of the page, you see a line item that says net OPEB liability. So OPEB stands for Other Post-Employment Benefits, and this is retiree healthcare through the Teacher Retirement System of Texas.
Which, I'm sorry.
Go ahead.
We're not responsible for,
But
we have to report it.
Yeah.
But in no way, ever, shape, or form, unless they pass a new law, would we ever have to cover retirement benefits for retirees. But because they want to share it off their books, they push it on all the school districts to have to carry it on their books.
TRS.
Yes.
TRS care, yeah.
This is the second fiscal year for this?
This is the second year of the district having to report this particular liabilities. The one right above it, the net pension liability, this is year number 5 of reporting this liability. You can see there was a pretty dramatic increase in the net pension liability from 110 million to 182 million this year. TRS, the board of TRS made some decisions to the actuarial assumptions. They made some changes to the actuarial assumptions. So they decreased the long-term rate of return and the discount rate, which had an effect of increasing the liability. So like Mr. Woods alluded to, this information is given to the district, and the district has no control over it. And if the district doesn't report it as provided, then we can't issue our unmodified opinion. So really, this is a financial reporting requirement only. This is not a liability the district will ever have to liquidate or pay off. But it is information, and as time passes and there's 10 years of data, 20 years of data, you'll see trends, and lawmakers, people at the state level will use that information to make policy decisions. Do contributions need to increase from the school districts, from the employees, from the state, or does the other side, do benefits need to be changed in some way to control this liability?
I just have to point out, if